I was verified by Business Insider as a 90% win rate trader. However, this was not strange to me or professionals like Jack Schwager and Tom Hougaard. So I recently published this book, Short Selling Master, which was endorsed by Jack Schwager and Tom Hougaard. Jack Schwager is the legendary best-selling author of the Market Wizards series, and Tom Hougaard is the best-selling author of probably the best trading psychology book of all time, Best Loser Wins. I've had Jack on my podcast many times, and I connected with Tom through a couple of conferences. We've done 3 conferences together. We have one upcoming conference on October 12th. Tom really loves that story of when I went to Colombia. When I went to Colombia and I took a motorbike up the mountain, 3-hour journey up there a couple of times, encountered the cartel. Tom's endorsement was the quote in the back of the book right here. It was a lot longer. In the longer version, Tom's mentioned one of his first trades was a biotech company and he didn't know why he shorted it. He shorted it because he thought it was bogus and it was up a lot. He made money on it, but it was kind of luck. In my case, like Tom said, in David's case, he doesn't go by luck. David goes through research, through a process. The 90% win ratio, a lot of traders come in thinking that's like lucky or that can't be true. That's impossible. If you're doing Forex or futures, big caps, a 90% win ratio, that's a red flag for in any of those categories of trading. However, in my case, I'm going through research, strict, rigorous research. I have a strict proprietary system of the 9 core indicators. I'm highly selective. I'm not trading everything, being very precise and very meticulous about everything. So the reason why the 90% win ratio is not strange to me or professional traders is that we understand what it takes and the process behind it to achieve this win ratio. So in this video, I want to run through the process of my research before entering a trade. Super rigorous and really strict stock selection criteria. A little bit of context for those of you that are new to this channel. The way I started was seeing these pump and dump patterns perform. And this was right after the Wolf of Wall Street movie came out. When I found out that he was doing pump and dumps and I started looking into it, I saw that it was a pattern. It was a pump and dump pattern. The stock gets manipulated upwards and it just has a rug pulled down. There's like a little noise in between there, but it's just like that. It looks like a mountain. The chart pattern looks like a mountain. That's how I started. Then when I started learning and trying to trade with small size, journaling and tweaking things up and analyzing my losses, optimizing and just changing things up little bit by little bit. Eventually, 10 years later, more than 10 years, 11 years later, I am the trader I am, and that's the rules that I have. The criteria that I've developed for my trades now in 2026, when my rules adjust, all just because of me analyzing my losses, cutting out some things, adding some things, and it all started with the pump and dump pattern. These days, the pump and dumps happen a lot faster. The cycles are a lot faster. Pumps are faster and dumps are faster. Some videos in the past, I go over the liquidity trap pattern, a form of a pump and dump. There's many forms of pump and dumps, and I'm refining constantly, adjust my rules and criteria to fit the evolution of a pump and dump. All of my rules have been documented and put in a very efficient format, and they're all in this book, Short Selling Master. I was telling a friend the other day, Hindenburg Research. What's Hindenburg Research? Their winning percentage, I'm sure, is really high. They publish reports. They took stock selection to the ultimate because that's all they did. They just focused on one company for months at a time doing research. Mine is like a version of that, but a much quicker version. Because since I started with nothing, I had to find ways to make money using my background of being analytical with architecture. And with architecture, we did research too. Before we did projects, we did case studies. We analyzed before we started designing. I understand there's many ways to make money in the financial market. My edge in trading comes from rigorous fundamental research. So in my book, I mention up to 9 stock selection criteria. For those of you that are newer traders and new to small caps, I want to share the most crucial stock selection criteria from me. So hopefully you'll get some inspiration out of this. So the most important one to me is the float. Float is the supply of the stock, supply that can be traded. As a short seller, you want to see the potential for the supply to increase. Because when the supply increases, it naturally is going to have more selling pressure. We want selling pressure, supply increase. Selling pressure, supply increase. Potential. So how do we see potential? We see forms of dilution. We see warrants. We see convertibles. We see ATMs. In order for them to use ATMs and to raise money and to do offerings, we got to see a cash need. Cash need, 6 months or less, is a nice sweet spot. Now, if it starts to get too in the negatives, this could indicate the recipe for a short squeeze. When the cash is like in the negatives and the company is a small float and there's like many negative factors that align, negatives that added up together equal a positive, just like in math. And that positive can cause a big squeeze. So we want to see just the right amount of negative things aligning less than 6 months of cash. We got to see a history of dilution, a history of them exercising warrants with warrant inducements. We got to see some convertibles in there, some toxic financiers that we recognize. And we put all this together, a recipe for increasing supply. Increasing supply, it's like our safety net as a short seller. So if we don't see a potential for supply increase, the stock can keep going up. Even with bankruptcy stocks don't have dilution. They're going to go bankrupt. So they're not allowed, in many cases, they're not even allowed to use their dilution, even if they have it. What does that mean? If there is no dilution, if there is no supply increase or potential for supply to increase, the stock can just keep going up. It could squeeze and go up and give the short sellers a really hard time. And then by the time it comes down, it's up so much, it just cancels out the short. You know, you're going to get squeezed and lose money on it. And like, it's just going to keep going higher. The second criteria is very important. And this is what not to trade. So it doesn't matter what kind of trader you are, you need to know exactly what you're not going to trade. So this is super important. And for stocks, what I trade, that means no Chinese stocks. They're out, completely out. The whole category is out the window. By canceling out the entire category of Chinese stocks, my life is easier. My mental capital is focused in the right place. Now, Chinese stocks, I go in depth in the book in chapter 7. It comes from my extensive knowledge through podcasts, through relationships that I've had with professional traders, working at research firms, and having the insight on what the other side is up to. So Chinese stocks, it's no secret now. It's 2026. This was a controversial topic in 2022, 23. But it's not controversial anymore. Boiler rooms for Chinese pumping activities, which I discuss in the book. Stocks can go 1,000% to 10,000% in a day. You have no chance as a short. Each one of these stocks has a potential to T12 halt with a high borrow fee rate. We've seen the lawsuit already from INHD, the hedge fund that was in there. And I have so much knowledge of the people that have suffered through Chinese stocks and their careers have ended, which you don't see on social media. People that were involved with Chinese stocks suffered big time. You're not going to hear about those stories on social media. It's important just not to trade it, because even if it's a 1% chance it might T12 halt, that's not a good trade. That's not a good risk reward. So if you take 100 Chinese stocks, one of those Chinese stocks will T12 halt, that's not worth it, man. For example, how many Chinese stocks are going per week? A dozen? Maybe more than a dozen? If you start messing with those, you're going to get in a T12 halt. You will be in it. You will be in the black swan. It's important just to cancel out the whole activity of trading Chinese stocks. Your trading should be less stress, more money, not more money, more stress, or less money, more stress. And if you cancel out that whole volatile section of Chinese stocks, you're going to do well. And I go over every single detail. I leave no stone unturned with the Chinese stocks. And I'm not going to go over in this video. It'll turn into a Chinese stock video. But it's all in chapter 7. Another thing you don't want to trade is nano floats. It's a no-brainer. Stocks with the supply is so low that the stock can squeeze for multiple days. We see stocks that go in a 4 or 5 day period from $1 to $100. There's just no way to compete with that as a short seller. Now, as a long, the beauty about trading is you flip the script. The long works, you do the opposite, and that could work. What's the downside of getting into a nano flow as a long? If you have a pattern for that, a system for that, you've done your research, you have your data, and you've proven that this has a good probability, go for it. As far as short, you can lose more than what you put in your account. Your account can go negative on a short squeeze. And the thing is with these nano floats, they move so violently. When a stock halts, it can skip multiple halts. You have no way to get out of that. With long, even if it skips halts down, the most you could go is to 0. But with the short, if it skips halts, you could owe way more than what's in your account. So it's better just stay away from it. So nano floats and Chinese stocks, completely avoid. You have a higher odds to survive your learning curve if you avoid those 2 specific categories. The third one is volume, and volume represents demand. Demand is what we need as traders. So the stock has no volume, it's illiquid. You shouldn't be trading it. Or it doesn't matter what you're trading, you need volume. Your strategies and other asset classes or other instruments that you're trading, long or short, need volume. If I'm looking for a capitulation with a short strategy, first red day, I need to see volume coming in, a volume of selling that's indicating a potential first red day, or volume that's indicating the stock is about to do a blow off top. For long strategies, you need volume too. You need volume to come in and push through resistance. You got to be really comfortable with seeing volume and recognizing how volume is coming in. That crescendo of volume is happening. You see volume coming in and you see the chart patterns forming and reacting off the volume, because volume is demand. And like, why is demand coming in? Is there a catalyst? What's the catalyst? Is this going to attract more volume? You got to be able to see it. Candlesticks forming, volume starting to increase. You got to imagine, is it going to break through that resistance? For long trading, you need to know that. And for short selling, you got to know that too. So when the volume starts to die down, when it starts to reach a peak after a certain point, it might just collapse and now the volume bars might be turning red. They might be indicating more selling. Long or short, we have to be really good with understanding volume. Everything in trading is supply and demand. It's a game of supply and demand. Like this video if you appreciate transparent and straightforward trading content. The level of professional trading that I'm doing right now is made possible by Cobra Trading. Cobra Trading is a broker that specializes in supporting short sellers. Cobra has an extensive short locate inventory, great customer service, best customer service in the industry, really good routes that I like to use, like for example, the rebate route REB25 cuts down my costs, covers the cost of commissions when I just trade through that route. And they also have Cobra Prime, which includes tools that I like to use, such as Trade Ideas and Ask Edgar, other softwares that are very useful for traders. It helps cut down costs. With mastering the craft of short selling, a lot of doors have opened up to me, such as being able to write a book with a top-tier publisher, getting connected with legendary trading authors. I'm able to travel around the world. I have a skill that no one can ever take away from me. Me being able to short sell with research, understanding everything about the stock inside and out, and having specific rules that will keep me for longevity. This is my career until forever. I have a research firm now, which I'll talk about in the future. I have the book, conferences, I give lectures at the universities, I travel around the whole world. So trading and short selling and mastering the craft of short selling has led me to this path. Life is good. So here's the story of how I found trading at the lowest point of my life. Click this video to find out more about my style of trading and who I am. Consider subscribing if you want to see more videos like this.